About stuff that you track, of course, far more closely, and that's the shape of the US economy and the jobs. Finally, there's a jobs report, right? We got that September report. Now, the market, after reading through it, thinks that we won't get a December rate cut. What's your sense?
I am less certain about that because if people focused on that 4.4% and say, oh, the unemployment rate went up a little bit above the Fed's natural rate. Well, for me, that's really not the interesting part of the report. What was interesting was that there were downward revisions to prior months' data of about 20, 30,000, and the most of the growth jump from the 70,000 or 50,000 that people expected came from government. And when you take into account these revisions, we're back to a very slow pace of job creation. And again, the sectors that created jobs were the usuals of healthcare and services that are not exactly the highest paying. So when you asked earlier about the shape of the consumer, Walmart has benefited tremendously because they have been able to discount to the low-wage, low-income consumer. And those are the companies that will do well because the U.S. consumer is not in good shape when you look at the growth of income, growth of employment, and where the growth of jobs are. It's not in the high-paying, high-wage sectors. They're in the lower-paying service sectors.
All right. So, William, let's get this clear. You're still expecting the rate cut or not? You're not expecting the rate cut. Is it in December?
If I were back in my job at Citi and I had to tell my clients what I think the Fed will do, I think they will pause. If I were on the FOMC, I'd be cutting by at least 50 basis points. And the reason for that is because I really take very seriously that slowdown in the labor market and the kind of inflation pressures that we're worried about. They are the transitory price level jumps that come about from tariffs. So I think the balance of risk to me are certainly weighed toward cutting. But I think the caution and the lack of data that we've had over the last several months has allowed the FOMC to become even more cautious and probably overlook December.
Yeah. William, on a lighter note, put in that application. I think there is a seat coming up at the Fed, FOMC. I think it's a done deal.
I'm not well connected.
Sorry, what is that?
I'm not as well connected to be able to do that.
No, I think I'm just...
You just need to be on social media, William. These days, everything happens on social media. Just need to put out a post.
Just tweet at them.
I'm counting on you guys.
But William, I'm weighing in for you. One vote, yeah.
But I think, obviously, I'm not saying right or wrong, right? Maybe it's correct, the right thing to do, 50 and not 25, and maybe the economy needs that support. We're not able to see that clearly at this point in time, and we'll figure out whether that comes out to be true. This Russia-Ukraine...
William, to round it off, when you spoke about that 50 basis points rate cut that you would have done if you were at the Fed, coupled with, I was just hearing your commentary. I mean, you sound a little cautious on the U.S. economy, which is a departure from the last 2-3 months that we've been speaking. You've been, very, very confident about growth. Is it because of jobs? Because all these AI guys, they've been cutting workforce left, right, and center in any case. And you mentioned that there's going to be some sort of an inflation play out because of tariffs.
The inflation play out, I think, is limited and to maybe a quarter point or half point. And you'll get maybe a monthly increase of slightly more than that on the CPI. But again, what the policy concern is where inflation is going to be over the next 1.5 to 2 years, because that's the lag for monetary policy. It's not the inflation today that we're worried about. And whether or not that inflation will persist, at least according to financial markets, the way the pricing is done on the break-evens, it's not going to be there. So I think the Fed is really less worried about that, except to say that the lack of data allows them to be even more cautious on that front. And the fact that they say, well, we know the labor market's slowing, but we see consumers and everything else doing so well, especially investment in the AI. And I think that K-shaped economy where there's a huge gain on the part of the very, very wealthy, but most of the working stiffs in the world are really hand to mouth. And I think that situation in the U.S. economy persists, and it's been a long-term story.
All right. We'll leave it there. William, always a great chat. Appreciate you coming on here on CNBC TV 18 and sort of talking us through some of this stuff. Thank you.